Gold has been around for ages, and the way that investors have used gold has also been around for a very long time now. But I recently saw an article on CNBC that basically says gold is now losing its status as an inflation hedge. So I kind of want to react to this article and talk about what these two traders refer to as gold losing its hedge. I also want to talk about what that could mean for gold in 2022 and the price of gold going forward. But before I get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. All right, so let's dive right into this article and talk about what these traders are referring to as gold not being a good hedge against inflation. Essentially, we have two traders here, Nancy Tangler and Craig Johnson. Tangler starts the article off by saying that investors need to start thinking differently when it comes to gold and a hedge against inflation. She points out that gold hasn't produced a positive return for investors during a consistent period of inflation since about the 1970s. In addition, she mentioned the Consumer Price Index here, and more specifically the Consumer Price Index for November of 2021. According to the Consumer Price Index, inflation hit its highest point since 1982 and rose to a new record high of around 6.8%. Meanwhile, gold has only risen in value by around 1% year over year. In addition, there is a great chart on CNBC that goes over the gold versus break-even inflation rates. Basically, this chart goes from January of 2020 and all the way up to December of 2021, and it shows how inflation is going up while the value of gold is going down. And I think there is a couple reasons for this. First and foremost, let's talk about hedges against inflation. So basically the term hedge comes from when investors want to protect their money against some kind of crash. So we can talk about stock market crashes or economic crashes. Basically what happens in this situation is investors will move their money from one asset class into another that has universal value. Now, gold is not something that is going to grow your wealth substantially over time, but it is something that can continue to grow in value even as the United States dollar is losing value. This is what we see in times of a recession. The United States dollar is losing value, so investors turn to hedges that are going to protect their money. Typically, these are commodities like energy and some precious metals like gold and silver. All of these things have inherent global value because it takes time, money, and resources in order to create an ounce of gold. Gold needs to be mined and then stored. So during times of traditional crashes throughout the stock market, you can see the price of gold starting to go up because investors are interested in that global asset. 1 ounce of gold is going to be the same value no matter where you are in the world. And literally, the United States has printed so much money over the last 2 years that Johnson, one of the other traders in this article, talks about how gold may only be a hedge against inflation when the United States government prints money. Now, they're talking about it being a hedge against this type of inflation because as the United States prints more money, as any government around the world prints more money, the value of those dollars starts to go down. And it goes down because there is more money in circulation. Think of it this way. If the United States government and the Federal Reserve had only $100 in circulation, that means there is only $100 in our economy, and that's it. If you had $1 of that $100, you would hold 1% of all of the wealth. However, if the Federal Reserve decided that they needed to have 100 additional dollars printed into our US economy, and that means there is now $200 available for everyone. The $1 that you hold by definition and mathematics isn't the same percentage as it was before, which means it doesn't have the same amount of buying power as it did before. This causes inflation because literally the United States government is printing more money and the value of everything is starting to go up, which means you have to have more and more money in order to buy all of the same things. Gold can protect you against that because gold is going to continue to gain value over time, and you can trade it for US dollars and be able to buy things with more money now. However, according to Johnson, that is the only thing that gold is good for right now. There are actually some better investments that will protect you against inflation. I think that is the #1 reason why we haven't seen the price of gold explode over the last couple years. Traditionally, that is where investors put their money in times of crashes. They wanted to put their money in gold because that was a way to protect their investments. However, we have a ton of other commodities in today's day and age. The number one alternative to investing with US dollars is cryptocurrency. Bitcoin specifically has been dubbed the digital gold. People have started to turn to cryptocurrency instead of traditional assets over the last 2 years. Part of the reason for that is because cryptocurrencies are new and they're digital, and a lot of the United States and the rest of the world is starting to look at a lot of these digital assets as the wave of the future. Bitcoin has a lot of the same properties that gold does. For instance, Bitcoin has the same value everywhere throughout the world. It also solves a currency problem because you can actually take your Bitcoin and other cryptocurrencies and spend them if the retailer across the world or in your own backyard accepts them. That is the same as gold, and transporting Bitcoin and other digital cryptocurrencies is a lot easier than it is for gold. If you want to sell your gold in, say, another country, you literally have to pick up all of your gold bars and move them across the ocean. That is difficult and it is time consuming. That will delay the amount of time and the amount of money that you get for your gold, because if you are delayed in shipping your gold across the sea or across the country, the value of gold could go down before you make that sale. In addition, if you are going to collect thousands of dollars in gold, you have to have a place to store them. Storing gold is not a difficult thing, and if people find out that you have millions of dollars in gold just sitting in your basement, well, that might be very difficult for you. Bitcoin solves that too, because if you want to trade Bitcoin or use Bitcoin anywhere in the world, it's all online. Everything is a digital transaction, so no need to store anything. And you can hold everything in an offline wallet or on a cryptocurrency exchange, so you don't need extra space to store your millions of dollars in crypto. And that is exactly what Johnson is saying in this article. He says that gold is not really a great hedge against inflation right now, and that Bitcoin is actually better if you're looking to protect yourself against crashes or inflation. This is because the value and the excitement around Bitcoin and other cryptocurrencies has exploded throughout the last 2 years. I mean, at the beginning of 2020, one Bitcoin cost around 7,000 US dollars, but by December of 2021, one Bitcoin would cost you around 50,000 US dollars. That is a massive increase, and a bigger increase than gold has seen in the same time frame. Like I said, investors want to move their money into things that are going to continue to be valuable over time. And if gold isn't that asset anymore, then people are going to pull their money from gold, and they're going to move it to cryptocurrency or other commodities. Now, this article also talks a lot about some other commodities that people are starting to move their money into. We have seen an explosion of green energy and commodities that are actually better for the planet than gold might be. All of these things are energy related too, like wind power and solar power. People are starting to invest in companies and REITs that solely focus on these types of energy. And the reason that they are a hedge against inflation, because people are going to need solar power and they're going to need wind power as the United States moves closer to zero carbon goals. And no matter what, whether the US dollar starts to tank even more and inflation starts going up, people are going to need energy, and they're going to need some of these commodities in order to start making more money. Now, there is one other thing that this article mentions about hedging against inflation. It talks a lot about gold, and it also talks a lot about cryptocurrency, and it also mentions a third hedge against inflation: real estate. Now, when it comes to hedging against inflation, there is one other super important aspect that you need to understand. Essentially, as inflation continues to grow, that means the price of everything in our economy is also starting to go up. The money that you have in your bank account and your wallet isn't going to buy you all of the same things. So when you protect yourself against inflation, you're basically trying to buy something that when you go to sell or get money from, you are going to get paid in today's dollars. That is the whole point of investing in general. You want to buy something that is going to grow in value that actually beats inflation, because this way you're actually making money. You can't actually beat inflation by getting a raise at your job. This is typically because raises are around 2 to 3% every single year, and that is what inflation is every single year, which means employers are only paying you more so that you can meet inflation and you start actually being able to buy things every single day. I mean, if you do get a raise that is more than 2 or 3% or more than 7%, then you are technically beating inflation at your job. However, most Americans don't get this, and they also have to start making more and investing more in order to beat inflation. That is what investors try to do with gold, and that is exactly what investors try to do with real estate. When you buy real estate, you can buy it for two different reasons. You can buy it to actually sell in the future, which is more like a traditional investment, but very risky because you don't know what the housing market is going to do. Or you can buy real estate and then rent out that property to somebody else who is looking for a home. Every single month, this tenant is going to pay you. When they pay you, you are getting money in today's dollars. So if you hold on to that real estate property, and no matter how many tenants you go through over a span of 5, 10, or even 15 years, 15 years from now, that tenant is going to be paying you in $20, $35. That can naturally protect you against inflation because you're getting paid in that year's dollars. So no matter what inflation goes up to, your prices and your rent is also going to go up. And real estate investing and gold and now cryptocurrency have been around for a while now. Cryptocurrency is honestly the youngest out of those three, but all of those things can protect you because they make you money over time. Your money doesn't just sit there. It actually gains interest every single year. I will say there is one more very important thing you need to know about hedging against inflation. Investing, no matter what type of investing you do, is never guaranteed. So when we talk about hedging against inflation and putting your money into real estate or gold or cryptocurrency, those markets are volatile. The prices that you'll get back in return could be actually less than what you bought them for. I mean, think of the stock market. We always talk about the stock market as being a place where money always goes up. Your investments always rise in value. However, sometimes they lose value. If you invest in something for $50 and you buy a share of a company, that investment could go up. It could also go very far down to zero. There is no guarantee when you invest in anything, which means your hedges against inflation are not perfect. And this has been a reason for a lot of Americans to avoid investing. A lot of people are scared of investing because they have money right now, money that they can use for whatever they want. However, if they take this money and throw it into a stock or buy gold or buy a cryptocurrency, that money is now in that investment. They can't use it today, and there is no guarantee or promise that that investment is going to go up in value. Even though it is an asset, it might end up losing them money if they're not careful. And honestly, this is a genuine concern, and I totally get it. But what the majority of Americans miss when they talk about not investing is there are risks to everything. Yes, there are absolutely risks to investing. You may lose all of your money. You could also gain a ton of money too, but there are also risks to not investing. Basically, the biggest risk is that your money is going to lose value every single year to inflation. Like I said, inflation goes up by around 2 to 3% every single year. The Federal Reserve considers this to be healthy, but in November of 2021, inflation was at its highest point in 40 years at 6.8%. That means your US dollars that you have in your bank account or in your wallet are really starting to lose value. And if you don't invest and you only keep your money in a savings account, well, your money is going to lose value every single year. So that is the risk that many Americans take on when they don't invest their money. And I totally get it. You have things that you need to buy right now. You have things that you want right now, so you want to buy those things. But you have to ask yourself, what is the most important thing to you? Is the most important thing buying something right now and not investing, or is investing for your future more important to you? And the answer is going to depend based on the person. There really is no right or wrong answer here. The right answer is whatever works for you, but you have to understand that there are consequences on both sides. And remember, doing nothing is a consequence in itself. And what you're probably thinking watching this video is, sure, gold might not be the best commodity or the best hedge against inflation, but to you, it might be way better than the extremely volatile market of Bitcoin and other cryptocurrencies. We have seen the price of Bitcoin go from $7,000 to $50,000 in the span of 2 years. In fact, Bitcoin hit a record of around $65,000 per coin back in November of 2021. However, we have also seen the price of Bitcoin go from $60,000 to $30,000 in the span of a few days. We've seen its value get cut in half more than once in 2021. And that is a big concern for a lot of Americans too. They would rather not put their money in such a risky and possibly unproven asset class right now when they could be using their money in stocks or other investments or just saving or using it today. And to me, that makes a lot of sense too, and I think that that is completely logical. Americans want to put their money into something that is safe, and for a lot of Americans, Bitcoin is not that asset. But here's what you have to remember about crashes and our economy and recessions that occur in the United States. Our economy kind of goes in a wave. We have booms where everything is great, people are making tons of money, and inflation is very low. And then we have busts, where we have Americans that are living through a recession. Not a lot of money is circulating throughout the economy and jobs are low. We have seen booms and busts in our economy since, well, the United States was created, and we have seen stock market crashes and booms since the stock market has been around. So what you have to remember is these things are going to happen. Of course, you need to protect yourself, and these hedges against inflation are just that. They are here to protect you against a crash or a recession. They are not necessarily long-term investments that you have for your entire life. I mean, some people definitely hold on to these investments because they always want to be prepared for something that could potentially happen, but they are just hedges for when something does happen. These crashes and busts are going to happen no matter what, and nobody can really predict them, just like nobody predicted a global pandemic would change everything about our society. So what you have to do is prepare yourself ahead of time. You have to have your goals in place, and you always have to do your due diligence when it comes to money. That means you have to have goals set up. So if this happens, what am I going to do? If this happens, what am I going to do? You have to have all of those answers ahead of time, so that way when things actually do happen and we see stock market crashes and your investments going down, you don't freak out, because that is how investors lose the majority of their money. When we see crashes, people start to pull out. They pull out and they lose money. Try to take as much emotion out of your investments and you'll start seeing a lot more success in the future. But again, this is all according to you. You have to make these decisions for you, and don't just listen to me or any other random people online. Do your own research and always do your due diligence when it comes to money, investing, and saving. I can't make the right decision for you and your family, so I don't know what is going to be the best hedge against inflation, because everybody has their individual goals. Everybody has something different that they're trying to protect. So ultimately, you will need to make that decision. But now I want to hear your thoughts on this issue. What do you think about gold and its ability to hedge against inflation? Do you think that gold is the ultimate hedge against inflation, or are there better assets to protect your money against inflation in 2021, like some other energy and real estate and cryptocurrencies? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.